Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, December the 18th. The year's 2024. Let's talk trading. Position size with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And risk management. Always have your risk management in place so you don't lose more than you're willing to lose on any one single trade. And we're going to segue right into position size. I've been talking with Walmal over the past week or so about position size and saying, we walk away every day with somewhere between 20 40 pips or more. In fact, if Walmal wants to share, he had a killer day yesterday. You want to tell the boys and girls and non-binary traders out there how many pips you banked?
Yeah, I had 146 pips yesterday, which is it blows me away. And the amazing thing is I had one losing trade of like 3 or 4 pips, and that was it. But it was just one of those days where, not patting myself on the back, that's for sure. It was just more of, I saw the trades, I took the trades, I didn't break any rule, and more importantly, the market moved, as expected. There was no, there was no silliness that happened, that can sometimes happen to you.
Right.
So I got lucky, at the same time I was trading well.
Right. Now, the thing is, on the screen, I've got the risk management screen up where I say position size is equal to risk divided by stop loss. But you always have the same position size. But your position size isn't necessarily tied to your risk, is it?
No, not necessarily. The reason why I always have my I guess there's a couple of things that you said in there that need to be addressed from my perspective anyway. I always risk the exact same amount. Why do I do that? Well, what's one of my axioms that I always hold to, and that is that I like to keep things simple. And so because of that, I don't want to sit there and every single time I get into a trade, figure out because of where I think it's going to have problems, where it's going to go and jump out, and all this type of stuff that you got to do with a calculator on the side. And by the time you're all done, what has happened is the trade's moved away. Now, if I was doing trading where, I'm doing it on a 1 hour chart or a 4 hour chart or a daily chart, yeah, that would absolutely make sense. When I'm making my trades on a 1 minute or a 5 minute chart, and by the time I do all the calculations, the trade doesn't exist anymore. And what I found myself doing was, because I was doing it that way, is that I was still taking the trades, even though the trade was done and over. And next thing you know, I'm taking losses on because, as they would say in the marine industry, I was taking water over the freeboard because what was happening was I was just making those silly type of mistakes. So what did I do? Keep it simple, stupid, right? And so what I did is I said, this is going to be my position size. I'll figure it out at the beginning of the week. That's what I used to do. Now I'm at a set number that I always go and do. Now, what that does for me, it just gives me that freedom. I don't have to think about it. I just go and do it. And then you say, oh, wait a second, Walmal, that's going to put you in a position where, what if it goes against you? How do you protect your account? You claim that you preserve capital at all costs. Yep, you got to do that. And what I've done is, to keep it simple, is I just go and say, you know what? I have a dollar number that I will not cross the line on. If I take my open positions, I will not go and cross the line on that number. And period. End of conversation. Don't want to talk to you anymore. And for me, it just keeps it simple. All the gurus that are out there will tell me I'm crazy, I'm nuts, you shouldn't do it that way, and they have a whole host of reasons why not to do it that way. But for me, I'm just trying to keep it simple. I'm a simple guy trying to keep the trading simple.
Yeah. So in other words, there's always somebody out there who wants to tell you something, why you're doing it wrong or why their way is better and blah, blah, blah. And, you know, you can almost put me in that category because, you know, I tease people about squiggly lines saying all you need is a couple of horizontal lines and that's all you need to trade. But, you know, when it comes to the position size, so what you said is rather than use the equation, you said this is the amount I'm willing to lose. Period. That's it. And so it doesn't matter if your position size is 1, 2, 3, 10, 50. Doesn't matter so long as you don't cross that line. Does that sum it up?
That sums it up. You
Yeah.
know, it's just, and that's why I go and have, you know, the terminal window open on the screen, where I use an EA that goes and tells me, and the biggest number on that screen is that bottom line. Where am I? If I'm in one trade or if I'm in, you know, 3 or 4 trades, tell me what that bottom line is, and that's what I'm going to. That's what I'm going to base all my trading on.
In other words, and that bottom line is your open PL, right?
Exactly.
Your open profit
Exactly
loss.
right.
Yeah. So if you see that your open profit loss is minus whatever it is for the day, or in all those deals or in the trade, it's like, well, I just hit that my risk limit and boom, I am out.
I'm out. I'm gone. Go play golf.
Yeah.
Whatever.
And now, one thing though we have to clarify because you know we talk so much, and it's like we know each other too well. Is that let's just say for a sake of argument, you're willing to lose $100 on a trade, but during the day you've made $50. Now, your risk is still at the minus 100 for the day, which in your case would actually be minus 150, right?
Correct. Yep, that's what I do. In the beginning, I didn't do it that way, and I would recommend if somebody wants to try this, don't do it this way. In the beginning, what I did was I just looked at it per trade, and you know, or what, and I had 2 limits: what I was willing to lose for the day, and what I was willing to lose on the particular trade. And I would recommend that in the beginning as you get better as a trader. But what I noticed was over time, this allowed me to go and take on a little bit more risk, but at the same time, I'm only risking what I was willing to lose for the very first trade of the day. And so by doing it that way, it just gave me a little bit more room because I noticed that more times than not, the trade would turn around and I'd get to where I was looking to get to in the first place. So I was willing to take on that risk because at the end of the day, what was going to happen is the absolute worst position I was going to be in was what I would be in if my very first trade of the day was to go against me and I lost all of it.
Yeah.
I was willing to take on that additional risk.
Yeah. So in other words, let's say you had $1,000 account and you were willing to lose $20 a day, and let's just say you know you're trading and you're actually up $10 for the day, and you put your next trade on. So you're looking at your account, you've got $1,010, but your red line is if I hit this line, I'm out, would be at $980.
Exactly right. And in other words, I was willing to go and lose $20 for the day, and yeah, and I would just look at the bottom line, and it just, to me anyway, it just makes sense. It's just practical because all you're doing is you're looking at one number, and based on that one number, that's your risk. You know, I'm willing to go and say for the trading for the day, I'm willing to go out there and burn a $20 bill, and it makes it so much simpler. And to me, that's the whole key, or at least for me anyway. That's the whole key to things because then I don't have to think. It's just do and die. You know, either do and win or do and die. You know,
Right.
well, actually, do and die. Actually, do and lose. But you don't do it. You won't lose. You won't die.
Right.
You put those in.
Yeah, it's funny because one of the things that's prompted this discussion on position size is I'm looking at, you know, how many pips we make in a day, and it's just like, why aren't we trading heavier so we can make less pips and walk away with the same amount of money? Because I think I mentioned yesterday, instead of calling it trading, we should call it risking. Because every time you put a trade on, you're basically putting risk on.
You're exactly right. That's exactly what you're doing. And you know, uh, I won't get into the history of things and why it's called trading, but the reality is that what you're doing is you're taking on risk for the potential of creating a profit for yourself, and that's all you're doing. And it doesn't matter if you're in one trade, you're in 50 trades. It doesn't matter if you're in, risking, one micro lot, but you're risking 10 lots. The reality is, how much money are you willing to risk? That's all it comes down to. It's like getting into the poker game. How much money are you willing to go and put out there? Because, yeah, as you're playing poker, you're putting more and more money out there as calls are being made, so on and so forth. But every player, if they're being smart, knows this is what I'm willing to risk as a max, and that's it.
Right. And sometimes you go, I'm all in.
Mm-hmm.
um,
Yeah.
no, but I was thinking because there was one trader over on Forex Factory who I had chatted with a few times, and he basically would, he was trying to make, if I remember correctly, about 500 pounds a day. And he was trading the open H4 candle break. Actually, let the first H4 close, and then he would take the break of the high or the low, and he was only going for 5 pips because he was basically, I think, trading almost 100 pounds a pip, and that was his trade. Just give me that one trade, and he'd be done, and then he'd go back to, I think he was a sailor or something. He'd go back to his boat, his ship, but and it's just making me think because we're playing with some things, and it's like, on the one hand, going for a lot of pips on a particular trade is risky because we were just in a trade, and what did we want to hit? Something like 11 or 13 on the pound, but we decided to bail out. We were up like 2.5 pips. We just decided to bail because just the price was just kind of waffling around.
Right.
But the thing is, if you can do something, and you've got a pretty high percentage of making 2 pips, it's almost like, Michal Kreslik had his 2 pips to Bentley. He just wanted to make 2 pips a day, and then he was going to make enough money to go buy his Bentley. And then he never did buy the Bentley. He just didn't think it was a you know, a good use of the money. Kind of reminds me when I was a kid before I was actually had my driver's license. It's like, yeah, when I get my car, I'm going to go put some mag wheels on it. Then when you get the car, and it's like, oh wow, those mag wheels are like $500. That's a lot of money. At least it was back then. It's like, nah, I never bought Krager mags.
Yeah. It's
Yeah,
funny when it becomes your money, all of a sudden,
yeah, I
it's
know.
a,
Yeah, and
you know,
so yeah, yeah.
yeah.
And so I guess the thing is, the way I look at it is it's pretty similar to Walmart. I'm willing to risk, so much, and that's it. I pretty much keep my lot size the same, even though there is something that I've decided the other day. It's like, a lot of times I'll trade against the M30 candle color when I shouldn't. So every time I'm itching to trade, what I against it, I go, nope, I'm not going to do it. But I add one to the lot size. So by the time I actually get a signal on the right M30 candle color, I might be trading, instead of one lot, I might be trading 3, 4, or 5 lots. And then because I would have been in that heavy anyway, so I might as well wait and get a better average in price. So anyway, the fastest 15 minutes is trading is just about over. So fellow traders, let us know what you what you guys are doing for position size, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.